the big interview. Reliance Mutual Fund launches further fund offer for the CPSE ETF and is a part of the government's divestment program. CNBC TV 18's Varinder Bansal is in conversation with Sundeep Sikka, ED and CEO of Reliance Nippon AMC. So it's over to Varinder.
Thank you. Well, Surbi and Nigel, if you love PSUs, which the entire market has been loving since last many months, this is for you. This is for real investors or retail investors. Imagine, since inception, the return for CPSE ETF was nearly 17.5% compared to Nifty of only 8.9%. And this is the follow-on public offer which is coming up. Size of 4,500 crores with a green shoe option of 1,500 crores. Of course, we have Mr. Sikka with us and Mr. Singh as well. Thank you both of you for joining us. I'll start with Mr. Singh. Okay, this is a big divestment plan of the government which has been enrolled now. How much confident are you that you will be raising 6,000 crores from this issue?
We are very, very confident about this. Since we came out with this offer, we have been interacting with the investors at various places across the country and the institutional investors across the country, and we've had a very good response, and we are very confident that the entire issue size would be totally subscribed.
Last time, if I remember it correctly, the retail investors' participation was not that great. It was around 10 to 15%, and mostly it was subscribed by LIC. Do you see that changing right now because PSUs are in flavor right now?
Yes, we see that changing, and at the cost of repeating, I must say that the retail investors' response has been very, very good across the country. We are also using the NSE Gold sovereign bonds platform to reach out to them. Further, we have this time given an upfront discount of 5% to all investors, including retail investors, but in the allocation mechanism, we have given a preferential allotment to the retail investors. So the 70% basket, apart from the anchor basket, would be preferentially given to the retail investors. So, and thereafter it goes to the retirement funds, and thereafter it goes to the other institutional investors. So the retail investor participation is something we're looking forward to, and we have a good response. We're looking to have a good response from the retail investors.
So clearly 5% upfront discount, which is big, and upfront allocation as well, which you are promising right now. Mr. Sikka, let me come to you. Why should I invest in a CPSE ETF? Give me 3 reasons for this, especially for the retail investors.
No, I think, Brenda, first, I think I'll say there's no reason why for any investor should not be investing. If you look at the track record, as you mentioned earlier, in the last 1 year, this index has given a return of 17% compared to a Nifty of 5%. Last 3 years, if you were to look at it, a return of 15% compared to 7% of Nifty. And also, what you have to understand, if you were to deep dive into the basket, each of the companies, today they're the Maharatnas and Navratnas of the companies, and each one of them have been doing well. If India has to do well, and which it will do well, these companies and these sectors have to do well, and we have these companies which are the leaders in this segment. So I think, and along with that, the 5% discount that will be given and the assured allotment, I clearly see a case. I think retail investors, as you mentioned earlier, while they did not come last time, this could be a very different story. You'll see, we have seen a lot of positive response across the country from small investors, and I'm expecting, I think, very good response for this issue.
Lovely. Some people complained why there is no loyalty bonus this time, because that was a big kicker last time. I think it was around 6.6% discount in the overall scheme of things. Any comments on that, sir?
So if you look at it, 6.6% is, if you look at the it was back-ended after 1 year, and 1 unit for 15 units held for 1 year. So this time we had to make a choice between upfront higher discount and a loyalty bonus and the preferential allotment thing. So the government felt that taking learnings from the early experience and the response that we had for the loyalty bonus, how many people stayed back and how many of them actually availed of that discount, it was felt that it is better to have an upfront discount rather than look for a loyalty bonus back-ended discount.
Lovely. Is there any way to change the index constituents of this? Out of all the top 10 names you have, Coal India and ONGC, which forms nearly 45% of the index, they haven't performed that much compared to, say, BEL, BEML, EIL. But will that remain the same way, or will you review that index after some point of time?
No, there is a 25% cap on the individual weightage to the basket, but we don't intend to change the composition of the basket. If you are asking that some stocks going out or some stocks coming in, that is not going to happen. It is a fixed basket. But if the individual share moves in the weightage beyond 25, that is corrected on a quarterly basis. That weightage is corrected, and the rebalancing happens on a quarterly basis.
So the index composition remains the same what it was last time. Tell us about the dividend yield, the expense ratio, which I think is the lowest in this ETF.
Yeah, correct. So again, if you were to look at, firstly, just to add to a little to your earlier question, if you were to see, yes, I mean, one or two stocks may not be doing well. Ultimately, it's a basket. I mean, the advantage a retail investor has compared to when he is buying an individual stock, he might be stuck with one particular thing, but as a basket, this fund has given, or this index has given a return, like we mentioned, about 17% in the last 1 year. Along with that, what has happened, the key difference is the 5% discount that you mentioned. I think this becomes even more relevant right now, because at that time, if you see relatively, the interest rates were almost double digit. The interest rates have almost come down. So this 5% actually is not, you cannot see in isolation. In absolute terms, 5 is 5. It's a much bigger number. And another factor that comes into account is this will be earlier the expense ratio was 49 basis point, which has come to 6.5 basis point. So effectively, which means that you're adding about 43 basis point return is added to the investor over and above the return that he'll be getting from the market. I think what becomes more relevant, I mean, from the government point of view also, what we are trying to, and I think as a asset manager, what we're trying to do is try to get more retail investors and trying to give them a pleasant experience. I think that's the idea. So at 6.5 basis point, this makes it one of the cheapest ETFs, not only in India but in the world. And if you compare this to an average mutual fund scheme, I mean, it's about, the expenses are less than about 200 basis point.
Actually, that's nothing. Okay, I see. Any word for the arbitrages? Because market people grapple with this thing. 5% discount. Some of the arbitrages will take this opportunity of shorting first hand in the futures because they are getting 5% cheaper in the ETF. Will that allocation play a major role for some of the arbitrages? How do you plan to allocate?
The way it has been designed this time, retail will be given, the first preference will be given to retail investors. After that will be pension funds. So if effectively see 30% is anchor investors, retail investors, and the response we are getting from retail is very good. Provident funds and pension funds. Only after that the other investments will be given and allocated. So I think the way I see, anybody who took an arbitrage opportunity or took advantage of it 3 years back, actually when we look back, he would not be happy because he would have made much more return had he stayed for 3 years. So I would actually encourage investors to come in this fund offering for more a long-term point of view. And the way it is designed is, it is designed basically for retail investors and for long-term investors like pension funds.
Lovely. Mr. Singh, any comment from you, sir, in terms of why a retail investor should go? Because you are the voice of the government. One word to the retail investors, why this is the fund, for even a novice investor or the first-time investor in this market.
So this is a well-diversified basket, and the returns have been really better, if not better than Nifty. They have been almost comparable and at a very, very low volatility. In a market where you are seeing extreme volatility, a basket which gives you a good return with low volatility is something that a retail investor should be looking at.
I'm sure you can't talk about company specific, but I'm sure you're very confident about how some of these PSUs will do in the coming few years, especially some of the energy heavy PSUs. Do you remain confident? Are the government rules and regulations in terms of giving that freedom to the management still there?
Yes. The government policy of giving autonomy to the public sector units is very much there. Plus, the government policy in the sectoral policies are now such that the play out of those policies add to the value of the PSUs. Like, if I may use the example of Project Uday. We have some of the energy sector stocks here like Coal India, REC, PFC. So this policy and the program of Uday has actually had a very positive impact on these companies, and it is reflected in their financials.
No, well, that's so true. And thank you both of you for joining.